All right. Hello, everyone. Good to see everybody. Thank you for joining us today for our monthly financial wellness ministry presentation. I'm excited to have you here with us as we do the work that God has called us to do. And so the God that we serve would like to have us not only physically healthy, but financially healthy, mentally healthy, spiritually healthy. And so our financial wellness ministry has put together our wellness ministry has put together another fantastic presentation for us that I'm excited about. Those that are watching on social media, we invite you to share the post. And if you'd like to come and be a part of the live conversation, those that are on social media, if you'd like to be a part of the live conversation, feel more than welcome to join us. I have the Zoom link pinned to the top of the social media comments. And so you can feel free to come in and join the conversation. But we're looking forward to it. And so I present to you the coordinator of our financial wellness ministry, my daughter, Kiera Rawls, the financial wellness ministry coordinator at Greater Bethel AME Church. I mean, Kiera Hall. I keep trying to claim her. Kiera Hall. All right.
Hello, everybody. Actually hand over the mic today to someone who is very knowledgeable, and like I thought I knew about credit. And after talking to Teresa, I was like, wow, there's a lot that I don't know. She taught me so many things. Excuse my kids who are loud in the background, but hopefully you can hear me as I just share a couple testimonies about people's experience from the person you're going to hear from. So a lady named Samantha P wrote a testimony and said, thanks to Teresa, I was able to refinance my 2018 Volkswagen. My interest rate initially was 16.50%. 16.5%. That was her interest rate on her car. And some of you watching may be thinking, well, that's close to my interest rate on my car. After 5 months and 140 points increase, I was able to refinance my auto loan with a new interest rate of 6.5%. That, I'm sure their payment went down a lot. I don't know the math on it. Another person said 12 deletions later, including a charge-off account and 3 default student loans with late payments, my scores are now 703, 698, and 680. It took 7 months, but it was well worth the wait as I started in the high 400s. I am forever thankful to BTK Financial for their knowledge and expertise in dealing with bureaus. Something about Teresa is she's the owner of BTK Financial. She's amazing with credit, and she has a heart for educating. And so there are people who do what she does, but I feel like she's different because she could charge, prices and all the knowledge she has, she really could charge so much for it. But the fact that she makes sure to keep it affordable and that she just gives so much, not just like giving you a fish, but teaching you how to fish. I want you to take your notepads out. If you have a great credit score, she might, teach you some stuff to make it even better or to just continue on that path. If your credit score is in the low 400s or super low, pay attention. She can help you because your credit can change your life. When your credit is bad, like everything costs more, you have less opportunities. I have people who can't even get down payment assistance programs because their credit is too low. And so please listen out to Teresa if you're looking to, be able to use any type of credit in your life. And just to let you know, when you rent, they check your credit. So Teresa, I'm turning the mic over to you. And I just want to thank you for sharing your time. And I'm just looking forward to everybody to be able to hear from you today.
All right.
Hi, everyone. Can everyone hear me?
Yes.
Yes. Okay. My name is, not sure. Okay. My name is Teresa Clark, and I'm the founder of BT Financial. Now, I started BTK Financial 3 years ago, and roughly after I started the home buying process myself, fixed my credit, and I came across a lot of information that I felt weren't aware of when it comes to credit, how to fix it, how to deal with it, and the type of opportunities that it present for you. Now, a lot of you may already know about credit, may already have good credit, may have some run-ins with credit. So I just want to take it back to the basics of what is credit. Now, credit is basically a tool that creditors use to determine your credit worthiness. How well your ability to repay your debts, your ability to repay a loan, your ability to repay money after you've borrowed it. If you're on track with that, then that's great. You get a numerical number that's a bit higher. If you aren't on track with that, then you get a numerical number that's a bit lower. The scale for your credit score, your FICO's credit score, range from 300 to 850. If your credit profile is in good standing, you have a good credit mix, you're paying all of your accounts on time, you're not maxing out your credit cards, you don't have any collections, then you start inching towards that 850. If you have anything derogatory, you start inching down towards that 300. So it's a sliding scale. Once you start having credit, once you start applying for credit, you automatically get 300 points. That's what everyone starts with once you enter the world of credit. And as you add things, delete things, miss payments, all of that stuff, it determines where you land on that credit scale. The way I like to say it is your credit score is your footprint in the financial world. It speaks for you before you get a chance to introduce yourself. It speaks for you before you get to tell your side of the story, what happened, whether, I had this account, I've been paying on time, I lost my job, or they cut my hours, or I fell on hard times, or simply I had to decide between, paying a credit card this month or putting food on the table. Life happens to all of us. But this numerical number represents you for your entire life from the time you turn 18 years old and is eligible for credit. And it doesn't really give you a chance to speak for yourself or give an explanation. So my goal is to help those who are, now in the world of credit and is affected somehow, whether it's by a bankruptcy or a foreclosure or just inaccuracies on your credit, because some people have bad credit due to identity theft, or way back when your mom or your dad took something out in your name and never paid it, and now it's on your credit. Whatever the issue is, my goal is to assist those who need that help. And as we get older and start crossing off certain milestones, home ownership comes into the picture, wanting to buy a new car comes into the picture, and all of this is reliant on this credit score. I made a few notes of things that I just wanted you guys to know about credit and where you are with your credit and what you can do going forward. So when it comes to credit, it's it's a numbers game, obviously, but there are many factors that can affect credit. And your credit, there are many different numbers. You have your Vantage scores, you have your FICO scores, and it all can get confusing. So I'm going to try to break it down really quickly so that you understand what you're looking at. When you see your credit score, you understand what they're referring to when they speak about your credit scores. For example, you have a Credit Karma account or you have any other third-party credit monitoring. That number or those numbers that they show you, that is your Vantage credit score. Again, if you're looking at Credit Karma, Credit Sesame, My Free Score Now, Identity IQ, any of those third-party monitoring sites, they show you your Vantage scores. And there's been a lot of debate lately about whether your Vantage scores are wrong or is it right, why is it inaccurate? And it's not necessarily that it's inaccurate. It's just a different scoring model than what the industry standard is. And the industry standard is FICO, FICO. That is the industry standard. Maybe in the future, creditors will start using Vantage. As of right now, they're only using FICO. And within the realm of FICO, you have many different credit scores. You have an auto score with FICO, you have a mortgage score, you have a credit card score. There's many different scores within that cycle. Once you go to apply for an auto loan, or you go to apply for a mortgage, or you apply for a credit card, whether it's a store card or a company card, whatever it is, they pull your FICO scores. And because of the difference in the scoring models, there's a discrepancy in the scores. You can log into your Credit Karma account and it can show your TransUnion score at 650. You go to apply for a car, they pull your FICO auto loan and it shows your credit score at a 600. It's not that your Vantage scores were wrong, it's just a glimpse of what your potential credit score can be. If you truly want to know your score, I encourage everyone, before you go to make a major purchase, before you go to apply for a car loan, before you go to apply for a mortgage, pull your FICO score. You can go to myfico.com. It's a little bit more expensive. It's about $45 a month, but it's the surest way for you to know, or the closest you can get to knowing what your actual scores are. So once you understand that the Vantage scores, it just gives you a glimpse. I would say to use it for monitoring on a month-by-month basis. Once you go to make a purchase, you pull your FICO. That way you're in the know and there are no surprises when you get in front of these creditors. Now, what's more important? Because I get this question a lot. A lot of people are so hung up on their credit scores. Oh, I need my credit scores to be a 700. I need my credit scores to be in the 800. And while the credit score is important, the most important factor is your credit profile. I can't tell you how many times I've come across clients. I currently have clients that are in the 700s and will still get denied for certain things. Why is that? Because their credit profile is not in shape. And by your credit profile, from the time you start applying for credit, every single thing is now building your profile. It's there for 7 years, depending on what type of account it is. If it's a bankruptcy or a judgment, it can be there from 7 to 10 years. Now, this profile, like I said, speaks for you. So if you have a lot of negative things there, it paints a negative picture. Now, say you're someone that never had credit, you start building credit and you have a lot of starter cards. You have First Premier, you have Credit One Bank, you have a card from one of these buy here, pay here dealerships. All of those are considered subprime lending. And basically subprime, I didn't necessarily, so I have to go to someone who's going to charge me an interest rate that's higher than normal to extend a property to me, like a car, or to extend a line of credit to me. And if your profile is filled with these subprime lenders, it let the bigger lenders and the banks know that, hey, your credit may not be so good, or your track record of paying back is not so good. So they'll think twice, or they'll become more wary about lending or extending a line of credit to you. So in focusing on your scores, you also have to ensure that your credit profile itself is in good standing. And by good standing, I mean pulling your credit report, seeing what negative items are on there. You can always pull your credit report for free at annualcreditreport.com. Every year, you're entitled to one free credit report from there. I suggest you pull it. If you don't have a monthly credit monitoring system, pull it, look if there's any negative items on there, figure out what you need to do with those negative items. I always say to start off by challenging those negative items, even if you know that it's yours. And the reason for that is because creditors also have certain laws that they have to abide by. And there are certain laws that protect you as a consumer from unfair lending practices and from unfair collecting practices. Now, you might have taken a phone bill out with Sprint 7 years ago or 6 years ago, and you know that you owe them a few dollars. Whatever happened, you switch carriers, whatever the case may be, you owe them maybe $400. You know that you owe that money. Now this collection pops up on your credit report and it's saying that you now owe $979. Yes, you owe the Sprint bill, but you now need a breakdown of what those extra fees are. You also need to know if this collection agency is licensed to collect on this debt in your state. You also want to know if Sprint sold this debt to this collection agency, or did they just, come across it because your information is constantly being sold. I don't, promote not paying your bills. My job as a credit repair specialist is not to help you avoid paying your debts. It's to verify those debts and make sure they're reporting once accurately. And that is the goal of a good credit repair specialist. There are many debt collectors out there who are very predatory in the way they go about collecting. And sometimes they're collecting on debts that are past the period of collection, which is called the statute of limitations. And the statute of limitations varies state by state, but it's something that you need to know as a consumer, because by law, if the statute of limitations has passed on a debt, you no longer owe that debt, or you're no longer obligated to pay the debt, and you can no longer be sued for that debt. So those are things that you need to keep in mind so that you aren't, one, paying on a debt that essentially, even though at one point it was yours, is no longer, an obligation to you, and to make sure you're paying the right company. So again, you go to annualcreditreport.com, you pull your credit reports, you go through it, make sure that the accounts on there are your accounts, because like I said, a lot of people don't realize they've been a victim of identity theft until pull their records and see accounts that they've never applied for or addresses that they've never lived at. So you always want to make sure your personal information hasn't been tampered with, and that there aren't any accounts on there that doesn't belong to you. So once you've done that, you've gone through the reports, you make sure everything is in good standing, you can then start building your credit if need be, or maintaining your credit. Whatever whatever your situation is, you can start getting a handle on it. I come across a lot of people who, I haven't viewed my credit in 3 years, or I haven't taken a look at it in 2 years. And honestly, you're doing yourself a disservice. You need to know what's on there, at least periodically, every 4 to 6 months. You need to make sure that your finances is in good standing, because this is something that follows you for life, one. And two, like I said, it speaks for you before you even get a chance to introduce yourself. So you want to make sure that it's painting the best picture possible. You want to make sure that it's showing you in a light that's positive. So you check your reports, you make sure it's in good standing, and try to maintain it or fix it, so to speak, if in the past you've had a few things happen and you need to get it rectified. Now, I think where a lot of people need education is in understanding how your credit score is broken down, the different points that's allotted to it, and how you can go about maximizing those points. And I think, as with any individual, once you understand that and you know the numbers and you know the formula, you can have a better handle on your credit. For example, the highest portion of your credit score is your payment history. And I tell a lot of people, 65% of your credit score is in your control. And that is your payment history, which is 35%, and your credit card utilization, which is 30%. Automatically, 65% within your control. Now, a lot of people think that, if I make a couple payments or I miss a couple payments, that's the end of the world. It's not the end of the world, but in order to get the maximized amount of points that's allotted for each section, you want to make sure that you're not missing any payments, and you want to make sure that your utilization is where it's supposed to be. The industry standard for utilization on a credit card is 30%.
Could you give me those two percentages again? Payment history, 65%.
I'm barely hearing you.
Okay, it says I want those two percentages you gave me. Payment history was 65%, and then what was the other one?
For your how the credit score is broken down,
Yeah.
Your payment history is 35% of your credit score. And that works out to roughly 192.5 points. Remember, I said everyone starts off with 300. And as you maximize each section, you get more points. So payment history, 35%, and that's 192.5 points. The second highest section is your credit card utilization, how much of your limit you're utilizing, and that's 30%, and it's 165 points. The next up is the amount, the length of credit history, and that's a tricky section in the sense of the only thing that really helps the length of credit history is time. The older the accounts, the more points you get in that section. Some people take the shortcut and buy trade lines or get added as an authorized user. I'm not 100% on board with buying trade lines. I don't speak about it as much because I believe in organically building your credit and doing the work yourself. You know, I feel like there's gratitude that comes in doing it yourself versus just paying a couple $100 and being added on someone else's line and getting that history. I don't think you're truly building your credit profile. But with being added as an authorized user, if it's a family member or a friend and they have a credit card that's maybe 10 years old with a $20,000 limit and you're just starting out and you need that history, then you can ask them if it's a card that reports to all 3 credit bureaus, ask them if they'll, you know, add you as an authorized user. And a big misconception with authorized users, you don't, or if you're the one with good credit and you're looking to add a family member or a friend, you don't have to give that card. You can, you know, request that you don't send the card at all, or you send the card to your house and you hold it. You don't have to give them the card. Literally, if you add them on as an authorized user, they basically get a mirror of that account. Everything that's on that account will now be reflected on their credit report. So the age of it, the history, the payments, all of that good information they'll get. But it also works in the opposite. If there's any negative on the accounts, they'll get that too. So you want to make sure if you're adding someone as an authorized user, you keep the account in good standing because it'll now affect their credit as well. And if you're being added on as an authorized user, that's the purpose. So your length of history is 15%, 82.5 points. The next 2 sections is new credit, meaning every time you add a new credit to it, and your credit mix. And both of those are 10% each at 55 points. Once you add all of that up, that gives you your 850 points. And like I said, the better you do in each category, the more points you have, the higher your credit score. Now, when it comes to your credit mix, and that's where some people struggle because the ultimate or the best type of credit mix is installment accounts and revolving accounts. And installment accounts is basically any account that you have a set amount that you have to pay every month over a set amount of time. That's an installment account, whether it's your car note or a mortgage or a loan or your student loans. Anything that's a set payment, set amount of time, that's an installment loan. So you have your installment loan, you have your loan credit, which of course is your credit cards. It's revolving, meaning whatever amount you use, your monthly payment is based on that. If you use nothing, you pay nothing. It's revolving, it changes every that credit cards, store cards, those are your revolving accounts. So you need a good mix of an installment account, revolving account, student loans if you have any. And all it does is create a profile that shows that you can handle different types of debt, different types of loan, and you have the ability to repay. If it's $50 for 80 months, you can pay it. If it's a credit card that you use and you pay every month, you can pay it. It just gives a better picture of your financial responsibility when it comes to debts and repaying them. So again, once you know the sections and the amount of points, you can kind of play with it and get yourself where you need to be in terms of your credit scores. Sometimes I get this question too, and I think the best answer is, you know, if I'm trying to pay down my installment accounts and my revolving accounts, which one should I pay first? You know, you came into a bit of money, you're wondering if you should pay off your car note. It's only a couple months left on it, and you're like, you know, I should go ahead and just pay it off and get it out the way. The reason why I don't recommend that is because your installment accounts are a set amount of money over a set amount of time. You decide to pay it off early, you can either A, be penalized for early prepayment, and B, the sooner you close that account, the sooner you will have that reporting. So as soon as you pay off that car note, as soon as you pay off that mortgage, it's now reporting as a closed account, right? Versus a revolving account is showing you every month in it. Most people, once pay off their car note, like credit scores drop a few points, and that's because your account is no longer reporting. You fulfilled your obligation and you got what you needed from it, but now it's no longer reporting on your credit. So I don't recommend prepaying or early payment on any installment loan. Fulfill your contract, fulfill the length of time that you're supposed to be paying it for. Especially since with installment accounts, your interest is calculated over that set amount of time. So if it's a 5% interest rate, they calculated over 80 months, they want their money over 80 months. That's they calculated it. So by you paying it off early, there's less money for them and can't penalize you for that. So installment accounts or revolving accounts, I always say focus on your revolving. It's the most active and it gives you the most headache if you don't pay it. The higher your utilization, the more your credit can drop. So you have extra money, you're choosing which one to pay, put it towards your revolving. What to do if you have no credit or if you have bad credit. Now, credit and bad credit is almost the same thing. I have clients that are in their 30s that has never taken out a credit card. They have no type of credit. That is considered bad credit because you have no footprint in the financial world. They have no idea how you're able to repay your debts. They have no idea of your track record, so to speak. So you want to create a track record. You want to see that you're able to repay your debts, that you're able to juggle different accounts, that you're able to be financially responsible. If you have no credit, I suggest you start building credit today as soon as you're off the Zoom. And there are many different ways that you can go about that. A popular option that I like to recommend is called a self-lender account. And with self-lender, again, you choose the amount of time and the amount of monthly payments you want to make. You make that payment. From the time you make the first payment, it reports to the 3 credit bureaus. You start building credit, obviously, and it starts your financial footprint. The thing I like about self-lender is that once you fulfill your obligation, you get that money back minus interest. So if you choose a 2-year term at $45 a month, once you reach that 2-year mark, they'll give you back your money minus interest, and the interest is usually, I think, $35 to $40. So one, you save money, and 2, you started building credit. So if you have no credit, self-lender is a good option. Capital One is also a good option. They secured credit card, and with secured credit card is basically you securing the card. You put $200 and you use it as a credit card and you pay it every month. And after a certain time, they'll either make it into an unsecured card or you finish the terms of the card and get a new one. I like their option. Discover IT. They have a good secure option as well. If you absolutely have to get a subprime card, I would recommend Open Sky. They're pretty good. Their interest rate is high, so I use them as a last resort, a last option. A lot of people favor Credit One Bank because they're easy to get and they approve almost anyone. My issue with Credit One Bank and why I don't often recommend them is because they're a subprime lender and it can be very predatory in their lending. First of all, there's a monthly fee that comes with the account, whether you use that card month or not. You still have a monthly fee to pay, and a lot of people don't realize that. So if you paid off your card and you're thinking you're good, you still have to go in on your due date and make that payment, and I believe it's like $8 or something like that. But that means predatory. If I don't have balance this month, I shouldn't be paying you anything. A lot of people complain about someone using their card in other states or their information being stolen and still being penalized by Credit One Bank for it, which cards, if there's a fraud alert or something with your card, you are not penalized for it. How can you penalize me for something that I do? So those are my reasons for not recommending Credit One Bank. They pop up a lot. As soon as you type in subprime cards, it'll be one of the first ones that pop up. And like I said, the process is really easy and they approve almost anyone. But the headache that comes with it, it's not worth it. There are other great options out there that you can utilize to start building your credit. Finger Hut is pretty good. Same thing, you order, you pay it, starts building your credit. There were 2 that was also really good, but they're having trouble now reporting to the credit bureaus. I think they're in trouble because a lot of people started using them and it's just a whole mess. My Jewelers Club is one of them, and basically you order a piece of their jewelry and it reported a $5,000 credit line, which was awesome because it's $5,000. It really helps your utilization. But like I said, for some reason, they're in trouble with the credit bureaus, so they're not reporting to all three anymore. So those are some options in terms of starting to build your credit. A secured credit card, being added as an authorized user to a family member whose card is in good standing, or getting a secured card. Either of those three options will get you well on your way to start building credit. And the beauty about starting from the bottom, with building credit is that it's easy. You add a secured card, you can see your credit jump 200 points just by adding a secured card. And it's because you're fresh meat, so to speak. Your credit profile is fresh. Everyone's like, okay, come on in and take some credit. So it's easier to start building once you have nothing versus when you started having accounts and you miss payments or whatever the case may be. Now, if you have bad credit and you're trying to get back on track, then that's a little bit more tricky. A lot of people go straight to, okay, I have a couple collections, I'm going to pay them all and I'll have my credit. And that's the furthest thing from the truth. Unless they've agreed to a pay for delete, in which you make the payment and they agree to delete it from your credit report in writing. The only thing that's going to happen once you make that payment is that it's going to be updated to a paid collection. Does nothing for your scores, does not help your credit profile. Someone pulls your credit, they're still going to see it. It does nothing for you. The best bet when it comes to having negative on your account is trying to get it deleted by disputing it, or like I said, getting them to agree to a pay for delete. If they agree to that and you want to make the payment, go ahead and get it done, because the goal is to get you back in good standing. If it's a single late payment that you have on there, you can always reach out to the creditor. A lot of them do accept goodwill letters, and it's basically a letter just explaining your situation, how long you've been with the creditor, what caused the lapse in the payment, and how you're going to go forward rectifying it. Some of them will accept if you decide to put the account on auto pay, whatever the case may be. Just try to get it rectified, especially if it's something that happened during COVID, between end of 2019 and the end of 2020, and even into 2021. A lot of them are being lenient with, mishaps, because they know a lot of people have lost their jobs, had their hours reduced, or had some type of setback due to COVID. Whatever the issue is on your credit, the answer is not ignoring it. You have to basically go through it and, get yourself back on track. Ignoring it is not going to fix it, and not fixing it will leave you with that credit and prevent you from doing a lot of things that I'm sure, you would want to do. Like I said, going through the mortgage process, some mortgage companies would accept you with a lower credit score, and that's all well and good, but the amount that you'll be paying over the life of that loan and the interest rate is going to cost you. And that's my whole thing when it comes to credit. That credit costs you, period. Whether it's with an auto loan, a mortgage, a credit card, no matter what you do, you'll be paying for that bad credit, and most of the time it's in a high interest rate. So that's basically it when it comes to my spiel about credit, how to go about fixing it, how to deal with bad credit, how to start building it. My company does assist with credit disputes. That's what I do. And also just started earlier this year a really cool program where I partner with a bunch of different realtors and mortgage lenders across the country to assist anyone that wants to become a first-time home buyer but are being barred from the process due to their credit scores. With the program, I work on their credit. I pair them with a really great lender. If they don't already have one, I pair them with a really great realtor. We do a lot of education in terms of the different terminologies that come with the mortgage process. We review their debt to income, the potential amount that they'll qualify for, their income, monthly calls to ensure that nothing has changed in terms of their occupation and the length of employment, just basically everything to get them ready for the mortgage process. And once we're at the closing table, the realtor that they're partnered with gift them back roughly half of what they've paid for the credit repair service. And I think it's really cool because it now enables a lot of people to get into homes. As minorities, for one, I think a lot of us believe that home ownership is out of reach. And my goal is just to make others aware that, it's something that's attainable, it's something that's affordable, and it's something that is within our right. There's a lot that you can do as a homeowner. There's a lot of benefits to being a homeowner. And I think because of the lack of education, a lot of us have been straying away from it. And my goal is to close that gap or narrow that gap as best as possible. So that is it. Again, my name is Teresa Clark. My company is BTK Financial. I'm on Facebook and Instagram. If anyone is interested after Zoom, you can reach out to Kiara and she can give you my information.
All right, wonderful. We appreciate that information. Anybody on social media, if you have questions, please type those questions in. We'll ask for you. Anybody that's here on the Zoom line with us right now, you can step forward and ask questions. But I want to make a comment and see what Teresa. It appears to me, when I'm talking with people that that are really struggling with credit issues but needing to make purchases, I really push the idea of discipline. And so it when you're in a tight place and you're trying to improve the trajectory of your financial position, that that discipline is key. And if you don't have to have it, instead of buying a $35,000 car, when you're already struggling and tight in your credit score, now you're going to end up with a 13% credit score. If you can practice discipline and maybe a car that you can get in good shape, but just go ahead and pay it. Because you could really, I just did a quick calculation, and if I want to buy a $30,000 car, and so say I can get a 2% interest rate if my credit is great. If I have 820, 825, 830 credit score, I can get a 2% interest rate. But if I have a 13%, that same car, I'm going to pay about $175 more. I'm going to pay $682, and so I'm struggling, but I'm adding struggle on top of it. If I feel like it's something
exactly
I have to do. And so I think while you're in this process of trying to build the credit, if there's a way that you can practice discipline and forego some luxuries, and forego some things that might look good, I think that seems to be a good route to take too for me, as far as the way as I think. What are your thoughts?
I absolutely agree with that. And I think discipline across the board in all areas of your life it's necessary. It's needed, especially when it comes to credit. I think a lot of people, for whatever reason, go above their means, when it comes to cars, when it comes to mortgages, and there's different reasons for it. There's different explanations, but I'm always a fan of being conservative. If you can get a car that's, maybe a little bit older and it may not be as new as, everyone else on the block, but you have a lower interest rate on it, then by all means go for it. If you can buy the car cash and not finance it at all, go for it, because you're saving yourself money in the long run. But even in the process of credit repair, it requires discipline. It requires you being able to say, you know what, I can't afford this, or I don't have the cash to pay for this, so I'm not going to use my credit to do it, because when the bill is due, I won't be able to pay it. It requires you saying, even though my credit score is a 750, I'm not going and get a 2020, Murano, or a 2020 whatever car, BMW, with a $680 monthly payment, because the percentage of me defaulting on it is much higher, versus if I go out and get, a Honda, that's a $480 payment or a $280 payment. So even with good credit, it's still about making good decisions. And I think if you're disciplined enough, then that will show itself in all areas of your life.
Right. Yeah, I was looking at that when you were talking about the utilization piece. And so personally, I have a large availability, but I normally I keep my utilization down under 7 or 8%. But then that takes discipline. So I have access to all of this, but I could really make sure that my score stays strong, and that if I ever need it, I'm always, promised a low interest rate if I can practice the discipline. And even though I have access to this large amount, but only utilize this small amount, so that can continue to strengthen my credit score. I think discipline is just so important to having a strong credit score.
Oh yes, and even with that, some people they start building the credit, and then they get access to a higher line of credit. And now, say for example, they get a federal card with a $10,000 limit, and now they're like, oh, I have $10,000. I can go on a shopping spree, or I can eat out more, or I can do this more. And before they know it, the good credit that got them the $10,000 card is now suffering because they have maxed out that $10,000 card, or they're at a 50% utilization on that card. And like you said, the goal should be to have the credit, to have access to higher limit cards, but not using it, or using it sparingly. So in the event of an emergency, or in the event that you do need it, you have access to it, not get it and splurge it, because then it defeats the purpose. And like you said, that only comes with discipline, because to have access to that type of money and not max it out takes a lot of discipline. And I think a lot of people, even on the journey of repairing their credit, need to work on their discipline and not being slave to their impulses. And that'll also help them on their journey of, maintaining good credit. If you have no discipline, you'll be right back where you started. And that's just the bottom line.
Will you post somebody on social media is asking for your information? Can in this Zoom, can you post your site, and then I'll copy it to Facebook? Or are you on Facebook right now?
I'm not on Facebook right now, but I can log on. I'll post it in the chat for you.
Put it in the chat, and then I'll post it. I'll put it pin it to the top of the Facebook comments.
Okay.
So Reverend John's, I'll post it when I get it I'll pin it up at the top comments.
Okay.
All right. Anybody have any other questions that are out there? This is a great discussion to have, but great wealth of information. But it's the type of information that you have to put into practice, because they have specific protocols, and they have specific things that they go by, and it is what it is. And so it's on us to build it. But as quick as we build it, if we don't have discipline, we can lose it. But it is something that can be done. I'm talking about, from a personal place.
Yeah.
That in 2007, when the housing market crashed, I was stuck with 3 houses, but I only had one head to lay down in a house. And so I had to figure out, how do I manage 3 houses, and 2 I can't sell because the prices are dropping so quick. And I was able to fortunately survive and not have any foreclosures, but my credit took a major hit. And
right.
But with discipline and really sacrificing, not without bragging, I'm pretty much almost maxed out on the credit score, and so you can come back, but it takes discipline to get back to that
right.
place. It doesn't mean you did a bad thing, when you have a bad credit score. It just means that you have some mishaps that you can come back from when you connect with people like Ms. Clark, but also are able to discipline your own desires. There's a scripture, I forgot where it is, but it's in Proverbs. It says, when you go to it, I'm just kind of paraphrasing, but it says, if you go to a friend's house and eat, and you can't control your appetite, you should cut your throat. And the idea is, if somebody comes and picks me up in their car, and I had a young lady, she picked me up in I'm a pastor, and so we were going to the graveyard after a funeral, and so I rode with a young lady as we were headed over, and she had this car to where, like in my car, like if you back up, you can see behind it, but in her car, while she's driving, she can see all around the entire car. There's some kind of satellite up, and so all that stuff right there. You know, this is like an $80,000-$90,000 car. You know, my truck is a 2004 Nissan Titan, and it was only $28,000 when I bought it in 2004. But you know what? I enjoyed that car, and every time I went out to lunch with her, I would enjoy it. But it never made me desire to drive that Cadillac that she was driving. And so we have to be able to have the kind of discipline to where we
Right.
appreciate what other people have and not want it ourselves.
And that does take it takes a lot of discipline. I'm someone that's impulsive by nature, and that's something that I'm actively working on. That's something that I have to work on daily, because if I see it, I want it, and that it's just not a good habit to have. So I'm working on that, but it also lets me know that there are others out there that are struggling with that, and sometimes that's the reason why they end up in the situations that they do. So even before I start my credit repair process with anyone, I ask them, you know, where are you mentally in terms of getting your finances back on track? Where are you in terms of your self-work and being disciplined? Because then it's not going to work. You're going to pay me for a service, but you may not see the fruits of that because you yourself are not disciplined. Like I said, whether it's myself or another credit repair company, you are responsible for 65% of your credit. There's absolutely nothing I can do about that 65%. I can't make you pay it on time, and I cannot prevent you from maxing out your cards. So if I'm working on your credit, you're maxing it out every month, you're still missing payments, it's almost as if I'm doing nothing. You can have 50 collections on there and I can remove all 50. If you are not paying your cards on time and you're maxing them out, you will not see the results of my effort. So I'm glad you brought up, you know, the aspect of discipline, because truly, without it, it's a moot point. And if I speak to someone and they tell me, you know, every time I see, you know, every time I pass Macy's, I have to be in shop, or, you know, every time, or every year I need to get a new car and I don't care what the payment is, then I know we're not able to work together, because we're going to be working against each other. What I'm trying to teach you and what you're trying to do, or the space that you're currently in, is not in alignment with what I'm trying to teach you. So it'll be falling on deaf ears, and either I'm going to end up with a bad review because you're going to feel like what I'm doing isn't working, or I'm going to have to end up in your program, and it's just going to end terribly. So I think mindset is a really important thing when it comes to building credit, and just for your everyday self-work. And discipline is a huge factor of that.
Man, can you hear me, presenter? Can you hear me, Rev?
Yes.
I just want to say that everything you said, it really touched me on that, because I experienced some stuff dealing with somebody that repair. And one thing I like about everything you did is what you just said. You be honest with people, you know, because I was dealing with a company and I just couldn't see nothing changing, and I was paying them $85 a month, and nothing wasn't changing because my habits were still bad. I wasn't disciplined, and they wouldn't try to tell me like what you said, like, hey, you know, you fighting against the grain. You got to hold tight, and you got to follow my plan. They didn't say that. They were saying, well, it's gonna take time. It was 6 months. I mean, nothing didn't move because I wasn't disciplined doing what I was supposed to do. But I'm older now and I'm wiser, and I'm definitely interested. And I get with Kiara on that information to get that and have a further conversation with you about, because I'm very interested. And I got a question though. Do I have, you know, and it's all about somebody loaning you the money, because I'm a veteran. I'm 100% service-connected veteran. So you know how to deal with that aspect. And what I really like is that you will help find a lender. You know what I'm saying? Because my credit is not terrible, but it could be better. But I learned something, what you said about it's not how the score is, it's that profile that they're going to look at. And I didn't know about that FICO score and all that, but just like Real was saying about vehicles and everything, man, I got slammed with like 13% interest and paid for a vehicle that was over, 10 years old, and paying like $50,000 for a truck. and you had $500 something a month for 5 years, man, on something. And like you say, you gonna pay. When you mess up, you're gonna pay. But I just want very interested in learning more about your organization. I like the presentation very much. You were honest, sound honest to me. That's what I look for.
Ms. Clark, I have a question, and I'm not sure if I'm at the right time, but how annuities, and you know, there's some annuities that encourage you to borrow from yourself. Do you advocate using that system of borrowing money?
With the annuities, it depends on what the terms are of the annuity. Will you be penalized for borrowing the money? What is the process of paying it back, and how would it affect the overall annuity?
Okay, so I guess, and the other part of my question is, does it affect your credit, the borrowing process?
For
Does it-
your annuity? No,
Oh, it has no effect. Okay.
no.
On your credit score. Okay, thank you.
You're welcome.
And I see someone said a person with no credit will get approved before a person with bad credit. And so I don't know how true that is, but I do know that when I started college in the 80s, that they used to sit out there on the set and give away credit cards to us.
Yes.
And that was a real
Mhm.
for
But if you notice, now they don't do it as much because certain laws have been passed because it's considered predatory. Because here you are 17, 18 years old, you know, some people are coming from a small town, they're not big on credit education, they don't really know what a credit is, and you're giving them credit cards that you know more than likely they're going to default on. And that's the thing about the credit industry. Lending is based, and it's just so crazy to me. Lending is based on the gamble of you not being able to repay it.
Wow.
So it's a gamble. Okay, this person, the probability, and certain credit monitoring systems will show you what your risk level is. And that risk level is what creditors use to determine the probability of you defaulting. So the higher your risk level, the higher the probability of you defaulting. And they're okay with that because now your credit is worse, you still have to borrow from them, and the amount that you have to pay back. If you become a subprime borrower, you're paying way more than the average person with good credit. And so the credit industry bank on that. They bank on you having bad credit. Same thing with the credit bureaus. Every time someone goes to pull your information, the credit bureaus get paid. That's how they make their money, by selling your information. So of course, you have bad credit, that information is valuable to a lot of different creditors. You know, you're a good prospect with your bad credit, believe it or not, because they can market to you more. It's easier for them to get you to accept that 26% interest rate because you can't do any better. And believe it or not, you're a good market for them. So, you know, you want to fix your credit to get yourself out of that pool. You know, you want to not be associated with that. Now, back to the comment about, you know, you'll get approved faster with no credit versus bad credit. That absolutely depends on the type of lender that you're applying for. There are some lenders that will absolutely deny you for having no credit versus someone that have bad credit. And the reason is you have bad credit, but it shows that at some point you had good credit and someone extended a line of credit to you. For whatever reason, you now have bad credit, but you were able to get credit before. If you're 35 years old with no credit, it shows that, you know, from the time you're able to get credit at 18 years old, no one has ever extended you a line of credit. You are now a high risk borrower versus someone that had bad credit, that's been building credit for years. They can come back from that. No credit to some creditors is even worse. you have no financial footprint, and they cannot calculate your risk level. They don't know what your spending habits are. They don't know what your repayment habits are. And some people and some lenders are not going to take a risk on that. They rather go with someone that have bad credit.
So let me ask you a question then. In the beginning, you mentioned, if your parents, and I remember people used to do this, if your parents put like a bill in your name and messed up your credit. So that's the bad side. But what about, like, say if you had a grandchild that was, in the next year or, year and a half that was going to be graduating from college, that would be beginning to work and maybe look at purchasing a home. What if you had great credit and you put that grandchild, could you put that grandchild on like as an authorized user, but not give the credit card, so that when that child graduated from college, they'd have the kind of credit to where they didn't have to pay a high interest rate to begin to try to start a credit history?
Yes, that is a whole nother conversation.
Oh,
But I'm a huge advocate of parents or grandparents or anyone with good credit adding on, whether it's your children or your grandchildren, to that credit, so that by the time they turn 18, they can have better credit. Um, Depending on the type of credit card that you have, it determines the age that you can add that child. Some of them allow you to add them as soon as they turn 6 years old. So it depends on the type of credit card. Some of them start reporting to the credit bureau once the child is 12 years old. So you would have to find out from your credit card lender what are the age limits with reporting an authorized user. But I absolutely recommend, if you're someone with good credit, start building your child or your grandchild's credit profile with that good credit. It'll do them a world of good by the time they're 18. It'll give them a foot up in the financial world, and it'll give them access to a lot of financial credit cards, whether it's, they need to start a business, for student loans. If you're not signing for that student loan, back in the days as a parent, you had to do the parent plus student loans and sign on behalf of your child. Now you no longer have to do that. They can sign their own loans and if they turn 18. But you want to make sure that they have the credit to do whatever it is that they need to do if you're able to give it to them. So yes, I am a huge advocate of that. If you're on this call and you have good credit and you have children or grandchildren, I suggest you start building that credit and basically just give them a leg up. By the time they're 18, they're not starting off, with bad credit or no credit. They'll have a footprint in the financial world.
it's awesome. All right. All right. Kiera, it's back in your hands.
Well, that was amazing, Teresa. I'm so grateful for you. I am so glad that I've connected with you. You are truly an answered prayer for me, and I'm so excited. I'm just super grateful. I was helping people with their credit, and just doing the best, and I was able to help some people, but you just have a wealth of knowledge, and I'm just so excited to refer all of my credit challenge clients to you and just to tell everybody about you. And I think that everybody who watched today was able to see just the level of education that you provided and the knowledge, and not just understanding the what, but the why. And I wouldn't be surprised if you haven't helped 100% of people who are listening in some type of way, giving people ideas to be able to improve their lives with the education that you've given. So her information is shared in the live. Maybe some of you are watching and you know me, and then you're like, what was that? Feel free, anybody reach out to me and I will send you over her website and connect you with her. So thank you so much. And for those of you who, yes. And we have a community. It's open. It's an online community at gbgville.com, financial wellness, where we're able to just chat and connect. And so anyone is welcome to join that community. It's like almost like a mini Facebook, but specifically for a financial wellness community with us. And we'll be meeting again on the 4th Tuesday next month. So we look forward to it. And I pray that you all have a wonderful evening. And thank you so much again, Teresa, for speaking. You were amazing.
Thank you. Thank you for having me. This is what I do. I love it. I like spreading the knowledge. I want to get this information to as many people as possible to assist them in bettering themselves. Credit is challenging. Credit, can spiral, but credit can also open a world of opportunities if you use it correctly. There are people that are using their credit to build businesses. There are people that are using their credit to just elevate themselves, elevate their lives. There are people that are using their credit on Turo, buying cars and starting their business credit. There's just so much that you can do with credit. It literally opens a lot of doors that you didn't even think possible. And all you have to do is build it and maintain it. And I think once you have the education and knowledge, then you'll be on your way to doing that.
To Ms. Clark, there's something that I don't know if it's or not, but one thing that I use my credit for is because like they always send me these cards saying for 13 months or 15 months you can have this money at 0% interest, but you have to pay like a 4% thing. And so what I'll do is I'll take about $2,000-$3,000 of their money and put it in a nice solid stock that I know that'll earn me about 15%. Now I won't go up there too high, but it'll earn me about 15 or 20%. And I'll use their money to buy my stocks and give them their money back. And so you can use credit to get it as a leg up. Have you ever seen anybody do anything like that? Use their credit score to make money?
I've heard of it.
Yeah.
I've heard of it. A lot of people also use the cash rewards from their credit cards, and that's a huge thing. You have monthly bills that you have to pay. If you pay with your credit cards, you're racking up these reward points. And by the end of the year, you can have a couple $100s in rewards points. You can treat yourself to a nice little massage, dinner out with the family, and it's all for using your credit on stuff that you'd had to pay anyway. Your utility bills, your car note, whatever it is that you have to pay on a monthly basis. I'm a huge fan of cards that have cash rewards. You have travel cards if you're someone that travels often. There's so many different types of credit cards and rewards that you can, earn from using them. And if it's stuff that you have to pay all the time anyway, you might as well put it to good use. I am also advocating for not using your debit card to pay these things because credit cards give you a lot of benefits. Like, use it, make it work for you. It's money, make it work.
So I think everybody got that. You can make that. You just have to practice discipline. And as long as you can discipline yourself, you can literally make money off of your credit score. But you have to. And so I like what Byron noticed that that Ms. Clark was being honest with him. Though you fighting against me, and so you can pay people all you want to fix it, but if you fight against them, it's still not going to do you any good. And so. Please contact her. I think Kiera put the link in there. Contact her. I got a feeling that we probably gonna ask her to come back in a few months to come and update us again. But I see people up in North Florida, South Georgia, over on the West Coast. The East Coast of Florida commenting. And so you all keep sharing this. If this is good information, share it on your page so that your friends can have access. You didn't even have to pay for this right here now. Now you're gonna have to a little deeper. But for this right here, you didn't have to pay for this right here. So God, God bless you, and everybody have a wonderful week, and make God proud by the way that you manage your finances. Have a great one.
You too.